Hello, Sabine Stovall with the Wealth Planning Company. You may be noticing that a lot of people are talking about interest rates. Why? Why do they matter? Well, it turns out they matter a lot. So let's talk about it. Interest rates impact the stock market, the bond market, the housing market, your ability to access cash. Let's break it down. First, let's talk about the stock market. If I am a growth company, then I can grow a lot faster, more efficiently if I have access to cheap capital. So let's say, for example, I'm a pharmaceutical company and I have a great idea for a cure for cancer. Well, I don't just get to come up with this idea today and start selling you something tomorrow. There's research, regulatory filings, clinical trials, manufacturing and quality controls, all kinds of stuff. All of this costs money. I might need to borrow $100 million to explore this cure. If interest rates are at 5%, it's going to cost me a whole lot more money to borrow that $100 million than if interest rates were closer to 0%. Lower interest rates reduce borrowing costs. So whether I'm trying to cure cancer or build a new factory, if interest rates are lower, I can grow more effectively. Lower interest rates are great for stocks. What about the bond market? Bond market returns are inversely correlated to interest rate movement. So let's say I bought a 10-year bond at a 5% coupon rate. So I'm getting 5% on my bond. But then let's say interest rates go down to 0. So if you wanted to buy a bond today, you would get a 0% return on that bond. 0% is not very attractive. So you might be inclined to buy my bond because I'm getting the 5% instead of a new bond at 0%. The lower interest rate environment is going to drive up demand for my bond and other existing bonds, which is going to drive up their prices. In an environment where interest rates are going down, existing bonds become more attractive. So lower interest rates are great for the bond market. What about the housing market? Well, if I'm looking to purchase a home, the chances are I'm going to need to finance a portion of that home with a mortgage. Lower interest rates mean lower mortgage rates. Lower mortgage rates mean homes are more affordable. Lower interest rates are great for home buyers. So lower interest rates are great for stocks, great for bonds, great for the housing market, but not great for everybody. Let's talk about some of the losers in a lowering interest rate environment. One of the big losers when interest rates make their way down are people who are hoarding cash. If you put $100,000 into a money market a few years ago, you could just sit back and accept a 5% risk-free return in your money market. If interest rates go to 0, then you're no longer rewarded for holding that cash. You may be inclined to invest your cash in something else, like stocks or bonds or real estate. This will have a ripple effect. Trillions of US dollars are sitting in cash right now. Once investors leave cash and start investing their money in stocks, bonds, and real estate, it will increase the demand of all of them, which then increases the prices. So stocks will do better, bonds will do better, and real estate will appreciate at a much higher rate. So I don't know if you've been paying attention, but Trump has been putting a lot of pressure on the Fed to lower interest rates, and it has been hilarious to watch. Despite the drama, most analysts believe that we will see interest rates come down starting in September 2025. So if you are not already invested, now might be a really good time to consider it. And if you need any help, give us a call. We would love to help you navigate the changing interest rate environment and find an investment that is appropriate for you. The world's a crazy place and the market is always changing. It looks like some of the changes ahead, including lower interest rates, may lead to some very exciting investment opportunities. So get in, enjoy the ride, give us a call. We're happy to help anytime. Sabine Stovall with the Wealth Planning Company.